All right, we're live.
We're live. Hey, what's up, folks? I'm Mackie. He's Robert Marson. We're just here to talk stocks. It's neither one of us is gifted with bullshit. We're kind of direct talkers. And to tell you this was a vibrant, exciting time in the market where you should be making huge bets would be a little disingenuous. A lot of folks watching sports and hanging out. This conversation already in progress. Robert, who's winning this summer of sport? We were just kind of taking a little, kind of some liberties with Nike's reputation before we went on air. Neither one of us is a fan. Do you see anything bottoming there? And if they're losing, who's winning? Because it seems like there's a lot of tail out there.
I'm as flummoxed as most people on the vicious rotation in the stock market. I was going to say we were short today because I thought we were doing this with two, and I didn't mean short. I meant short. I didn't mean short stocks. I meant short folks and short ideas because it's a hell of a market to try to figure out what to buy. And David has joined.
Yeah, it really is.
Good morning.
Good morning.
David,
sorry I'm late, everybody.
Who's winning this summer? That's okay. Welcome, man. You're always, come on in. It's fine. You can come in your pajamas. We don't care. It's a little quiet in the market is the theme. We're wondering who's winning. I mean, what's going on?
I don't know who's going to win, but I know who's not winning. 6 feet Under Armour and Nike. So stay away from those as turnarounds for the retail guys. They're still value traps in my impression. So.
Well, we can absolutely say the
Democrats. I would completely.
We can say absolutely the Democrats are not winning this last week. They've had a tough week with news flow, but from a stock perspective, healthcare has done really well. I mean, it's been a rebound trade, and whenever risk is put on, I mean, the XLV and XBI have been doing well. So individually, it's been much tougher. So for the index people who are the sector traders, they've been doing a lot better, I think.
Yeah, healthcare is the yin to the AI trades yang, right? So when the AI trade is off, the growth managers rotate into healthcare. And on Tuesday, I actually went over my Koru Medical, the subcutaneous drug delivery pump company. So as a counterbalance to the AI stocks that I own. So yes, healthcare has been a good spot this summer.
I still own the Koru Medical that you suggested. What was probably about a year ago, maybe even a little bit longer.
Yeah, it's doubled for us, and it's been digesting a pop. It got to 6.5, and I didn't sell on it. This is a 25% compounder, and I hope to own it for 5 more years, so at least. So it's a good little company. It's just the beginning to start the switch from liquid drugs delivered by IV to delivered by subcutaneous pumps with needles.
So basically,
anyway,
I do have kind of ignoring the rally. I mean, how are you playing it?
Excuse me, I didn't catch that.
I'm sorry.
Oh, no problem. No, how are you trading it? I mean, it's you're getting a lot of volatility in something that you want to own for 5 years. That makes the upside nice, but kind of that's its own mixed blessing. You don't want the stock too far in front of itself. I mean, so are you getting the nice stuff? Or are you getting opportunities to enter and maybe add to it?
Yep. Yes. And it did drop under 4.
Are you getting good? Yeah.
It's back to like 470. It dropped to 390 like a month or two ago in the peak of the AI, rally fury. And I did talk about it on the show under 4 as something I would add to. But now it's rallied 20% off the bottom, so I'm just going to sit. But it's a good little company, and if they can grow, there's not, David follows this space closely. There's not many 25% organic revenue growers in healthcare, especially in medtech, is there, David? I call this a unicorn. Would you call that a unicorn?
I don't know about it. It's unicorn in that it's rare. Unicorn as in like it's a meta or like it's some sort of so rare that everyone in the world's going to want to buy it. I don't know about that. Actually, I'll say no to that. But it's
the TAM's not big enough for it to be a massive business. It's rapidly growing with a lot of neat trends behind it, tailwinds, but it's not a big TAM.
But I think you and I share that same quality in that 25% top line growers are super rare. like that can sustain it for more than 1 year, like where they didn't have a new product that came out and then next year is going to be 10% and then the following year's comps are going to be tougher and you're going to be at 5%, and that, it's to find something that can grow 20-30% a year. That's why when you look at some of these things, you just put a flyer on them and say, I'm going to believe in the compounding of this, if you know the company, obviously. But and I've done that in other industries that I'm not that familiar with, and it's generally worked out. Sometimes that growth is just fake. It's just borrowing from the future. But I'm just trying to think of some past ones, like Ben Bry and I talked about this the stuff that I owned at $13 and sold at $25 because I'm a genius. I'm literally a genius at that. Oh, it's now like 300. But it was compounding so fast. My mistake was to be like penny wise and pound foolish, of just not saying, well, why wouldn't you just hang around here? Where else are you going to find a fintech company that's growing like this?
Mm-hmm.
But live and
learn.
Well,
it's hard to say which is more painful.
I did find a new
winner
stock.
Turn into a loser or holding it too long? We're stepping all over each other with the mics. I'm sorry about that, guys. I'll just tell you what I'm thinking. I'm looking at consumer stuff, just watching where they're actually working right now. That's because you see a lower end version of what you guys are talking about, which is a lot of price moves based on sort of squishy data and sentiment. And as long as the retailers aren't actively saying, you know what, things aren't bad. We're Williams-Sonoma, like we watch the sales every single day and it's not bad. That tends to be the only thing that can assuage the street. Otherwise, it's just a bunch of, the consumer's breaking on pricing and they hate everything and no one's buying anything. That's not what I'm seeing. That's not what I'm experiencing. I'm kind of looking for pullbacks in the cheaper retailers that I can get into. I've talked about Target a lot, but also consumer names that have been good. I mean, golf is a great example of something no one pays that much attention to. I've been adding to Callaway on the way up. It's a simple breakup story, but the real kind of multiplier is the number of rounds of golf being played in the U.S. It went down after COVID, as expected, as the smart bet seemed to be. And where the smart bet and the actual companies diverged was that people are playing more rounds of golf than ever. We're on a record pace this year, 6%. You take a company that should grow kind of with GDP. The idea was that it got inflated in COVID and was going to give all that back. That takes long time to plateau. Instead, you've seen an immediate resumption of growth. You're seeing rounds played up 6% year to date, which is, better than expected. This is a company that really should grow. Speaking of Callaway and actually Schnedt, the Titleist owner in Japan, but companies that should go roughly with the pace of old white guys getting old, and taking up sport. 3% assumed. Well, if you can get that to 6%, that's a lot. All of a sudden, young people like golfing. That makes a difference. Callaway's no longer got top. It's not super cheap. It's at a nice little run here, but I think this summer's time, you just waiting for dislocations. You're fishing when they aren't biting. I don't expect to see rational moves all over. Taking the rips, you see a nice 20% move in a stock you want to own forever. You're not doing much with it. I take these as opportunities with a company like Callaway, just because I don't think things are ever as bad as they seem. I think we're just in a slow news cycle. And if I can get a 15% discount on something I like anyway, I'm adding to it, doing a little nibbling, playing a lot of golf myself. It's a workable summer plan.
Yeah, I mean, if I just go from an N of one, I gave up my golf club membership about 10 years ago. They called recently and said, hey, by the way, you're never getting off of this this kind of rebate, kind of return of your equity list. You're never going to get that because it's just going so slowly. But we'll give you a deal. And I was like, absolutely, I'll do that. I kind of miss playing golf a little bit. And so I'm the guy who's returning to it from a while ago. And, it's an annuity, right? Because if you buy a set of clubs, if you're an avid golfer, you're always buying a club, a new driver, a new thing. But if you're someone who's kind of every now and then, every 6 years, you're buying a new set of clubs. You're just like, okay, this is the old, I have to get something new. So I like that one. I wish you had said it to me 45% ago, but
They did a breakup of the Topgolf. That spinoff was not priced where you'd want it to be, but what I underestimated was the degree to which just not running a super expensive chain of driving ranges, how the amount of benefit that would have both narratively and financially for Callaway to get rid of that division. So once they did that and just got back to sticking to their knitting, they're doing fewer clothing lines than they did before. I like to see that narrowed down. I want them to sell expensive golf clubs to people like you who are just kind of getting back in the game, and you realize the driver that you had 10 years ago is 20% shorter than the one you can buy today. So you go out and get fitted, and the whole food chain gets to eat off everyone who comes back to golf. The equipment actually gets better, So it's Callaway just kind of sticking to their knitting is pretty good. That's a reliable company that deserves a multiple upgrade, because when they were running Topgolf and comp stores were going down 7%, they kept thinking they could reverse that with like chicken wings and a good ad. That was when you didn't want to own them.
Yeah. Well, I have one.
Anyway, it sounds quiet out there.
Yeah, I have one call.
Ideas.
Yeah, I have one update. So I have a couple interns this summer, and so I put them to work on a couple names that I own, one of which is Teladoc. And it's always a good splash of cold water to get a completely unbiased view of things. And they're a little bit they're partially the way through a couple names, but one of the feedbacks was on Teladoc, and they said, look, this company is not making money, and it hasn't made money in a long time. And so who's to say that they're ever going to make money? And that's a disaster. So the first cut was, this is a mess. And, I've mentioned this a few times that I own it and on the show here. And I've been in touch with the company recently. I like what they're doing. But one of the things that came out, which, again, an intern without experience, can say, look, they're losing money. Who knows if they even stay afloat? You go through the balance sheet. It made me go through the balance sheet again. They have $750 million of cash, $1 billion convert due next year. For someone who doesn't know, that sounds impossible to solve, right? It sounds like, okay, you're going bankrupt. If you owned a bookie $1 billion, you'd be trying to find an out of country passport, and you'd be running away if you only had $750 million. But companies have an amazing ability to refinance, because the debt holders, they don't want the stock. They don't want it to convert to stock. So they'll be more than happy to take a refinancing, take their cash and go home, or refinance at a much higher interest rate. And you'll say, well, that's not good for the company if they go from 7% to 10% or something like that. And that's clearly true. But they're generating a little bit of free cash. So, depending on how you look at things, they're not losing tons of cash. Like, this last quarter was $30 million cash use. So that's 20 something quarters of cash. Can they solve this by then? I don't know. That's a good question. But we at least have a lot of time to wait to see what happens. And I really do believe that they've said that they're going to refinance. I believe that they do. I think if they do, the stock will go a lot higher because that overhang is lifted. But they have to do that, right? They have to do that between now and then. So let's see what they do. They're aware of that. That's not something that, oh, guess what? We didn't know that we had $1 billion due. So I think I do have a positive catalyst coming. I'm taking that warning of, hey, listen, at some point, companies have to make money. And if they can't get there relatively soon, I mean, the refinancing will give them some time, but you have a year or two to really get this together. Otherwise, this new CEO came in for no good reason. So we'll see. They have a plan. They've been moving people over to an insurance model. I'm sticking with it. I'm looking to buy more, and it keeps going higher. So we'll see if there's like you said, waiting for a dislocation. Maybe the quarter they spend more than they should, and there's a chance to buy it at $750 instead of $9. But I'm still there. I thought I'd just give an update of how an intern looks at something versus maybe someone who's kind of more familiar with balance sheets.
Yeah, I had an intern this summer too. I was kind of starting from scratch. AI is helpful. It's it's helpful, but it's nice to kind of teach the kids how to work the numbers. Take a look at it. I guess we'll put there unless you guys have other trenchant thoughts for the afternoon. Anything to offer? David, we'll go first since we're stepping on each other's audio anytime we try to actually talk. We'll let you talk, then kick it to Robert.
Sure thing. So I still own Yeti. You mentioned consumer, products that you're taking a look at. I'd love to know your thoughts if you take a look at it or if you've taken a look at it recently. It's kind of bounced off this bottom, and it's summertime. They've come out with a whole new line of products, different colorways, different. I think a show a long time ago, we both said, they should put their name on everything and just sell those. They're now selling cast iron pans with Yeti on it. And so they're taking that to heart, I think. Not that we gave them that advice, but I think they came to the same conclusion. I'm willing to let this one ride. I'm up 19% on it. We'll see. I like the idea that at least someday someone says, this brand value is so great. Maybe I'll have it. I hope it doesn't turn into a Rubbermaid though, where I thought the same thing with Rubbermaid when it was beaten down, and that didn't work out so well. So I just thought to bring up that since you mentioned the consumer names. I don't know if you have any thoughts on that.
My thoughts on it are, I too have been impressed with the kind of value, the quality of which they've gone into these other things. It smelled like a disaster. It smelled like they were going to just have Yeti stitched on kind of a crap backpack, and that would be the end of the thermos company with the stores. The stores are actually much more impressive than I thought. So I would have taken the other side a bit more aggressively, but I was wrong about their ability to do it so far. And so I'll give you a hat tip for that one. Robert, what do you got?
Oh, I actually got a stock that I'm going to wait for next week, but I'm going to give people a teaser. So this Iranian war proved that there's an elite intelligence gathering operation in the world, and it's called Mossad. And my stock is a backdoor way to participate in Mossad's success. We'll have to hold for next week. On retail, I'm sitting with my Crocs. I'm sitting with my Crocs and my Abercrombie, and the data is looking a little squishy for both on foot traffic, but very decent on DTC and website visits. So I'm hopeful that the 4 analysts that upgraded Crocs in the last 6 weeks got a wink and a nod about that 1% sales growth forecast being extremely low and very beat and raisable. So that number will be out in a couple weeks, the end of the month.
I think it's super beat and raisable. And I think foot traffic, just as a metric, is mismeasured. I think it's slightly more credible than Michigan confidence, but not by as much as you'd think. Anyway, let's wrap it there, boys. Everyone, have a good day out there. We're Wall Street Beats. Check us out. Subscribe. Do whatever you got to do to watch us 24/7 because we're the hottest show on all of network internet. Take it care. Happy Thursday.
Thanks, guys.
See you next week.